Hi, everybody. I'm Megan Sweeney with Dundalk Renaissance. I'm the marketing manager here, and Sonya Dease, our housing and financial counselor, and Denise Flynn, the loan officer at PNC, who specializes in first-time home buyers, is with us today. And we're going to be talking about the importance of having a savings while buying a home and why you need to have a savings. As many of you may know, that we offer a $5,000 Dundalk-wide grant. We have 10 of them this year, among other requirements like an income requirement. We require that you have $7,500 saved or 5% of your income, whichever is higher. And while that might seem a little alarming, we do it because we want to make sure that you're building wealth and financial stability. And Sonya's going to speak a little bit more about that.
Yeah, so again, like Megan mentioned, my name is Sonya. I'm the housing and financial counselor with Dundalk Renaissance. Should you be interested in taking advantage of our Dundalk-wide grant, I will be speaking with you to review your eligibility. And one of the major components that I will make sure that you meet is that savings requirement. Now, the savings requirement, it may seem as if it is a large amount, but when we want to break down what it really does help you prepare for when you go throughout the process of home ownership. Now, when it comes to home ownership, there are going to be expenses that you will pay out of pocket. This will include your earnest money deposit, and in this market, this has been around $2,000. Then you have your inspection, then you have your down payment, then you have your appraisal. All of these tend to be out-of-pocket expenses that you will have to have easy access to as you are going through the process. And our way of ensuring that our grant recipients have that ready is by having it already prepared in your savings account. And in this market, we've been seeing over the past year that the expenses and the requirements have increased. So we had to meet with the time and do that increase as well. There are going to be other expenses that you will incur throughout the process, and I will have Ms. Denise to take over to just discuss the loan estimate and just other expenses that you will incur.
Thank you, Sonya. And again, I am Denise Flynn. I am a loan officer with PNC Bank, and I do specialize working with first-time home buyers. As Sonya had indicated, along with the upfront monies that you must pay upon entering into a ratified sales contract, the closing cost and the prepaids that are involved in acquiring your loan, the closing costs are primarily made up of the lender's fees, which are made up of underwriting, document preparation fees, and they can be worded in lots of different ways. And each lender just classifies them as they can be called an origination charge or underwriting document preparation fee. That is the cost that the lender charges to basically get your loan through the process. Then we have the appraisal and the credit report fee. They will be paid for upfront, so you must plan accordingly because those vendors must be paid. They are third-party vendors. You cannot choose your own, and every lender has a company that they work with to secure that for you. The home inspection fee is another one. Now, the home inspection and the appraisal are two different things. The home inspection is going to be ordered with you for you once you're under contract. And what that does is that checks all the systems in the house. That checks the if you have air conditioning, the heating, the electrical, the roof, the plumbing, all of that to make sure that when you get in your house, you don't flip a light switch and have a fire, or that you your toilet and the water doesn't go up to the ceiling or anything like that. If there are repairs, then your realtor will help you to negotiate what the seller will and will not take care of. If there's like some little crayon on the wall or things like that, they are cosmetic things, and the seller typically doesn't take care of those items. But the major items in a home that keep a home secure will be looked at. The appraisal is what makes certain, let's say your agreed upon purchase price or the contract acceptance is $200,000 or $250,000. That appraisal protects you and the lender to make sure that the house that you are buying is worth what you have agreed on. That appraisal is yours and only yours. It will only be sent to you and for your eyes only. We cannot send it to your realtor. We cannot send it to the seller or to the seller's realtor in this case. That will show you comparables of houses that have sold within a certain mile radius, within a certain time frame to support that value. There are instances where it comes in lower than expected. And then negotiations can go between you and the seller to either lower that, or sometimes the seller just says, no, I'm just going to walk away. And then, then you go back basically to the drawing board. But there are lots of different options that can happen if that should occur. Then there is the credit report. You have to pay for the credit report because we do have to do a full tri-merge credit report. We have to take a look at it, analyze it, and that is done on every loan for everybody on the loan. And again, that vendor must be paid. A flood certification is done, and it doesn't matter if you're living in a house that's going to be on the top of a mountain. Every single loan, a flood certification is pulled to confirm that you are not in a flood zone. If you are, then we will discuss whether or not you need to have flood insurance on your property. A tax service fee is also a one-time charge. And what that does is that links your future payments to Baltimore County, Baltimore City, wherever the case might be, for future payments and remittance of your taxes to the county or to the city within your lender. Every lender has that. Then we get to the actual closing costs. Now, the closing cost, the title company has a very big job, and you need to have a title company. You can't do it yourself. They will search the title from a very long time ago to make certain that there is clear title on your loan. And they go back, they search the title, they have to do some document preparation. If there are any liens that have to be taken care of, they make certain that those liens are okay. Because without that, the deed cannot be transferred to you from the existing owner. And they also prepare that deed. There is an abstractor that does that work for them, which is also a third party. They have to pay that person. Then there are, there's like lien certs, there's tax certs and things like that that they have to do as well. All of this are third parties that they need because, like I like to say, it takes a village and we all have to work with this together. Then there are recording charges, whether you're in Baltimore County or Baltimore City. They charge a fee, and it's a flat fee, but they will charge a recording fee to record your deed of trust, which is the security instrument once you go to settlement on that property. They also will record your title insurance and your the title insurance, the deed, and all of that will be recorded. Once they are recorded, and recording's a little backed up because of the pandemic and things of that nature. A lot of people are not working directly in the courthouses, but it will get done. You'll get a copy of those. You'll keep those papers with your safe papers for after you settle, okay? But you'll get a copy of those, but there is a charge to do that. Then there is transfer taxes and recordation taxes. Typically, they are split equally between the buyer, which is you, and the seller. And that is an addendum in the sales contract that is signed by you and the seller where you agree to do so. One of the wonderful things about being a first-time home buyer, whether it be in Baltimore County or Baltimore City, you will be exempt from 0.25% state transfer tax that the seller will pay for you. But the other fees, and they are formulas. It is 1% to the buyer, 1% to the seller. And then the recordation tax is based on, say, $5 or $5.50 per thousand, et cetera, et cetera. And the title company prepares all that for you. The city or the county charges these recordation tax fees to record the deed of trust, okay, and the deed. So this is just a formula, and you can't shop around for that. Title insurance. Lender's title insurance is required on all loans, and that is based upon your sales price and your loan amount. So it will vary on every loan. Your owner's title insurance is one of the greatest things that you could ever have. It is a one-time charge. It does not renew like your homeowner's insurance does. But let's say, like I mentioned previously, the title company will search the liens and judgments and things like that on the property and mechanics liens. But let's say 6 months, 6 years, or 16 years down the road, you get a notice in the mail that there is a contractor maybe that was not paid. And you get that notice and you think to yourself, my goodness, I didn't own this property when that occurred. Remember what I said, you will get a copy of your recorded title insurance policy after the court is done sending that to you. And our initial inclination is to say, oh my goodness, I have to hire an attorney. What do I do? You don't have to do any of that. you will take out your title insurance policy, and there are several major title insurers in the state of Maryland, and every title company has a relationship with a few. They will choose someone, and that is part of who they also use with their attorneys that review the policies. But you'll make a phone call with the 800 number and say, look, I got this notice in the mail. They'll ask for your policy number. You will send them the notice and you're done. You don't do anything else, and they handle everything for you. You don't get a bill or anything else like that. And then they'll send you notification that the issue has been resolved. Again, this does not renew every year like your homeowners or hazard insurance policy does. The next section is going to be your prepaids. Your prepaids are your escrows. That is for your taxes, your property taxes, and your insurance. When you purchase your home, and we'll use by way of an example, let's say you purchase and you settle your home on your home in May of a year, the seller more than likely has paid for the taxes up until July 1st in the county or in the city. As if they have owned that house, the tax bills will come due July and December. That's when they will be due. If it was their primary residence, if it was not their primary residence, if there was an investment property for them, they still would be due on an annual basis and normally collected in July. But because they have prepaid for up to July 1st, you must reimburse the seller on your closing disclosure. And that will be disclosed to you on your loan estimate. And that's the initial loan estimate, okay? So, because you're gonna be the owner of that property for those 2 months, you don't write them a check. It's all part of what we collect. And then that's done at the time of closing, but it's disclosed to you up front. Then at settlement, we will collect a few months depending on when you settle and how we establish what I call an escrow bucket. And because we don't want you to be short. And then every month when you make your mortgage payment, 1/12 of the annual payment goes into your escrow bucket, so that when you get your tax bill, because you always get a courtesy copy of your tax bill, you review it, of course, to see if there's any increases or things like that. But it is remitted to your lender, and then it is paid for you on your behalf. The same thing holds true for your hazard or homeowner's insurance. That will protect your house in case, God forbid, you have a fire or anything like that. But we will collect the first year's annual premium at closing, and then we will take 1/12 of the annual premium and make it part of your monthly mortgage payment. Again, next year or the year following when it renews, you don't pay that bill. It's just for your records only, and it is sent to your lender to be paid out of your escrow bucket. Another thing that falls into your prepaid section is what's called interim interest. This is very important as you decide to move, because let's say, again, we're settling in May. I just like that date for whatever reason or month. If we settle in May, your first payment will come due July 1st. And when you make your payment in July, interest is always paid in arrears. So you will pay the interest due on your new loan for the month of June. But let's say we settle May 29th. There's 31 days in May, so that the 3 days, the 29th, 30th, and 31st, becomes what's called interim interest. So we must collect those 3 days of interest on the new loan because you are the owner of the house, and that loan becomes yours for those 3 days. So the thing that I always like to encourage everyone is to, if you have a lease or if you're on a month-to-month lease, and if you must give 30 days or 60 days notice, I encourage you, when we work together, the timing is very important. So you give your notice, because we try to avoid, if at all possible, that you don't have your first mortgage payment coming due and still have perhaps a rent payment due, because we can avoid that. We don't want you to have to pay rent and have your first mortgage payment come due at the same time. If you've chosen a loan that has private mortgage insurance, and there are some that do not have private mortgage insurance, there's lots and lots of loans out there, and you have to check with lenders to see what they have to offer. Your mortgage payment will also include mortgage insurance or a PMI. It's called private mortgage insurance. That will also be part of your monthly mortgage payment. So at the end of the day, in addition to your down payment, which DRC can help with, you have to plan for and be responsible for and not assume that anyone else will pay this for you. Everything that I mentioned, it's your closing cost, your prepaids, and which is your escrows, and everything else we have to reimburse the seller. Now, I know PNC has some grants, there's some lender credit. There are some additional grants available that you may be eligible for. You can also look at securing a gift. You can look at perhaps a 401k loan. And we can also, your realtor that you're working with can also ask and see if a seller is willing to offer any seller assistance. None of the above are 100% guaranteed. So we have to plan for the worst and maybe expect the best. So your bottom line number, depending on the sales price that you qualify for, and that's also something else that you need to work with your lender. It's not just qualification, it's where you feel most comfortable with your payment. And then take a look at, okay, along with my down payment, as I said, DRC will help, but they may not cover it all. You have to be responsible for the rest, in addition to having the resources for your down payment. Thank you.
Thank you, Denise. You definitely provided a great overview as to the finances associated with the loan process. And that was the goal of our meeting today. We just wanted to share the importance of, yes, we have a grant, and like Ms. Denise alluded to, they have a lot of the lenders out here. They offer grants, lender credits, and then there's an opportunity where you may receive concessions from the seller. But guess what? None of that is guaranteed. So the one way to ensure that you do your part is to build your savings, have that amount set aside, because if it falls through, guess what? Either you're going to lose out on the home, but if you have it in your savings, you still have your skin in the game. And if you get to closing and you do not need to use any of your savings, guess what? Now you still have the money for emergencies, because as a homeowner, if your hot water heater goes up, if your plumbing, if a pipe in your wall bursts, you can't call anybody. DRC is not going to answer the phone if your hot water heater goes up, but you are going to be responsible for that. And the one way to do that is to ensure that you have your savings and you keep those behaviors throughout.
Yes. And if you want help with budgeting or financial planning, Sonya can help with that. Denise also can help with some aspects of that. Denise, what products and what can you do to offer folks who are just starting their savings journey?
Well, we at PNC I love this. We have what's called a virtual wallet. And what I really love about it is it's 2 checking accounts and 1 savings account all linked into one. What I really like about it is you could, and you just manage it however you would like, but you could maybe use your 1 checking account for your bills, the other one maybe for something fun, and then savings, well, for savings. And you can set up your direct deposit however you would like to set it up. And then we have the online banking. We can use mobile banking with a very minimal amount of direct deposit. It's free. And we can, go that direction as well. If anybody has the need to have to build credit, we have a wonderful secure credit card, which I'm a big fan of, and I've had many people use it with us. The minute that the secure credit card is opened, we immediately report to the 3 major repositories. And then every month thereafter, if you put $300 in, I always encourage, and Sonya will tell you the exact same thing, never use any more than 30% of it. Use it, pay it back. You can make the payment directly in the bank. And then the good thing about that is when you're finished with it, we give you that money back. That money is yours. So you would come in, you would use $300 or $500 of your own money. And then once you're finished with it, we give you that money back, because obviously it's your money and we're not going to keep it. But it works very quickly. And sometimes everybody's situation is different. Sometimes individuals need just one more trade line to get them where they need to be. In what I do, there's no such thing as instant gratification. Not everybody's cable ready. And if you need that maybe extra trade line as you're, saving your money or trying to save your money, it's a great idea. I know DRC has my contact information. I can put, if you're maybe not sure how it works or what branch might work best for you, please reach out to me directly. And I can also put you in contact with someone that might work best for a location for your job. Or the East Point Mall branch is actually one that I service. I can help you to schedule an appointment directly with one of our service bankers so that you can get in, get out. We are still open, and we can just get you aligned with them as well.
Awesome. Thank you, Denise.
And just to let you know, if you don't know where to get started, and you just want to take an overview as to your whole application, please feel free. Like Megan mentioned, we offer our counseling sessions here at Dundalk Renaissance. They are completely offered at no cost, and it also includes a soft pull of your credit report. So in addition to going over your budget, savings, we will also take a look at your credit, just to give you, again, that realistic expectation as to how your credit will be reviewed during the process. And just like Ms. Denise mentioned, how to strengthen it. If we need to add an account, if we need to pay down some debt, everything that you need to do before you get to that point, because it's going to be key. If the past year didn't show us anything in this housing market, is that you have to be ready, because when you find the home, these homes were going fast. So you don't want to have to do work, still do some pre-work when you get to that process of home ownership.
And then Sonya, what exactly is a soft pull of someone's credit?
Yeah, a soft pull is, we got two types of inquiries. You have a hard inquiry, which when you apply for a home loan, the lenders are going to pull your credit report with all three major credit bureaus, and then with the intent of establishing a new line of credit or a new home loan, right? A soft pull, we're taking a look at your credit report just as an overview. We're just going to peek to see how things are going. We're not offering you any credit, and it has no negative impact on your credit report. So if you're looking at how to, or where you stand credit wise and savings, the soft pull is the best bet to do first before actually putting an application in for home loans, because like Ms. Denise will tell you, once you put the loan in, you only have a certain amount of time before you have to actually make a move.
Awesome. Any last remarks, anybody?
No, I think, working together, I mean, I've worked with Sonya and Megan, and I think working together, I think that we can definitely help you on your journey. It is a journey. To be patient, be willing to work, and we're willing to work with you and be here with you.
At your pace. Because if we provide the clues and you don't make a move, again, it's at your pace. But please take advantage of all the resources that you have available to you. Don't be scared to ask. Send emails. I know Ms. Denise will share her information, and you can visit DRC's website, and you could schedule to join one of our upcoming Be a Buyer workshops, where you have an opportunity to, again, hear from a lender, hear from a realtor, just as an overview, just an hour of your time, just as to what to expect throughout the process. And then you could schedule your own counseling session. Again, they're offered at no charge. So please take advantage of that.
Absolutely.
Awesome. Thank you guys so much for joining us. We'll see you soon, hopefully. Have a great day.
Have a great one.